Good morning, dear students. Welcome to the home mentoring session of accountancy. Myself, C.S.K. Khanna from the SD Vidya School, Ambala, Kent. Dear students, I hope you had gone for the topic of journal entries and you had also practiced some of the questions relating to journal entry. Today, I will continue with the same topic and share with you how the journal entries to be recorded with reference to some other different type of the transactions. As the lesson is very important, as I earlier shared with you, that it is the basis of the whole accounting process. So let's understand one more numerical with reference to the journal entries. Over to the statement. Enter the following transaction in the journal of Ganesh Brothers. You have been given date, transaction and amount is given. First transaction say sold goods to Dev rupees 1 lakh. Now again the same basic rules will be there and same steps are there. First step is there, we have to recognize the account. Second step, we have go for the nature of the account. Third step, we have to recall the principles or rules of the debit and credit. And in the last step, we had to apply those rules with reference to the transaction and to record the journal entries. With reference to this transaction, sold goods to Dev, as I share with you, very simple, cash word is not given, so only the name of the party is given, so it will be regarded as the credit transaction. Now what the accounts are there in this particular transaction? Very simple, one is of Dev and second is of sales, that goods being sold out. So goods, they are the part of the assets, so they will be regarded as the real account and Dev's account will be regarded as the personal account. So rule of the real account say credit what goes out. Personal account rule say debit the receiver. If we analyze this transaction, we will find it out very simply that the goods as a real account is going out, credit what goes out. So we have to credit the sales account. Instead of goods purchase or goods sale, we will use the word purchases or the sales. When the goods are purchased, the purchases word is used. When the goods are sold, the sale word is used. Second account we had recognized, that is of Dev, is a personal account, and the rule of personal account say debit the receiver, credit the giver. Now who is receiving these goods? Dev. So what we have to do? We have to debit Dev's account and credit to be given to the sales account, and this way we will record the entry Dev's account debit to sales account. And as usually the very simple aspect is there that we have to write the narration and we are writing the narration for that. Now how we will go for the other transaction in this case? Let's understand. Received from Dev in full settlement of his account. Now technically understand, the business has sold the goods to him to the value of rupees 1 lakh and account is being settled how? Account is being settled at rupees 98,000. Now first understand the meaning of the word settlement. Settlement here means nothing is outstanding. Business has to recover rupees 1 lakh from Dev for sales, but after paying 98,000, the account being settled. What it means? That business has given a discount of rupees 2,000 to Dev. Now this discount which is given by the business is a loss to the business and it is regarded as the discount allowed. It is a common parlance in the business that when the cash is received quickly or before date, or when cash is paid before date, a type of a concession, rebate is given or received by the business, that is known as the discount. Here it is regarded as the cash discount, but from business point of view it is a loss, as business has received only 98,000 instead of rupees total 1 lakh. So discount allowed will be regarded as the loss or expense of the business. Now recognize the account which is involved in this transaction. In this transaction, broadly there are the three accounts which are involved. One is of the received from Dev, that is the cash received cash account. from whom it is received, that is the party, Dev, the name of the party, personal account. And I explained you here that the third account is here, that is the discount allowed. It is a type of the expense or the loss of the business. Now three account we had recognized. One is cash, other is Dev, and other is discount. Now let's understand the nature of these account. Cash account nature is real account, Dev account nature is the personal account, and discount account nature is the nominal account. Now let's apply the principle of the three accounts. Cash account principle say debit the receiver. Cash account rule say debit what comes in, credit what goes out. When the business is receiving, cash is coming to the business. What we have to do? We have to debit the cash account. Second account is of Dev, personal account. Credit the giver. Who is giving this amount to us? That is Mr. Dev. So Dev will be given the credit. Third account, as I share with you, that was of nominal account, that is discount allowed. And the rule of nominal account say debit all expenses and losses and credit all incomes and gains. So what we have to do? We have to give a debit to the discount allowed account. So the entry will be here with reference to this. Cash account debit, discount allowed account debit as a loss to Dev with rupees 1 lakh. So here what we have to do? We have to do this way, that cash account will be debited with rupees 98,000, the actual amount of cash which is received. Here see, discount is our loss, that we have to debit here as a nominal account, and to Dev from whom the account has been received and account is settled with rupees 1 lakh. So Dev should be given a credit of rupees 1 lakh. So this way we will record the entries where more than two accounts are also involved here. Third transaction say sold goods to Manmohan. Very easy, that it is a part of the credit sale. So two accounts is there. Manmohan is a personal account. Sale is a very simple real account that includes the goods. So what the rule of real account say? Debit what comes in, credit what goes out. Goods are going out, so we have to credit the sales account. Manmohan is a personal account. What it say? Debit the receiver. When the goods being sold to Manmohan, who is the receiver of the goods? Manmohan is the receiver of the goods. So the entry will be here. Manmohan's account debit to sales account with the amount of transaction, that is 80,000. Next transaction say Manmohan returned goods rupees 1,000. Now it is example of sales return. Sales return means, or return inwards means, the goods which being sold being returned by the customer. Now business is receiving what? Business is indirectly receiving its goods back. So definitely we will use the word sales return account. From whom the business is receiving this? Business is receiving from Manmohan. Credit the giver. So credit should be given to Manmohan. So the transaction entry will be here. Sales return account debit to Manmohan account. Entry will be here. Sales return account debit to Manmohan account. Sales return means the goods being received back by the business. Basically it is a real account, goods account. So we will record the entry sales return account debit to Manmohan's account. So the transaction will be recorded accordingly. Next transaction say that received from Manmohan in full settlement of his account 78,200. Again, like we had learned this, received from Dev in full settlement of his account of 98,000. See here again, received from Manmohan in full settlement of his account. So first of all, we have to see how much amount a business has to receive from Manmohan. From Manmohan, business has sold goods of 80,000. He had returned goods of 1,000, so 79,000 business has to receive from Manmohan. But his account is settled by paying rupees 78,200. So rupees 800 is again the discount which is given to Manmohan by the business, and it is treated as a loss of the business. So again, same way, received from Manmohan, we will record the entry cash account debit with 78,200, the actual amount which is received by the business, Total amount which is received from the business from the Manmohan was 79,000. The difference, that is of 800, is the discount allowed, that is a loss of the business, to be debited here as a nominal account. So we will debit here discount allowed is 800 as a loss of the business. So the journal entry will be here: cash account debit, discount allowed account debit to Manmohan account with rupees 79,000. So this way we will record those transactions also where more than 2 accounts are also involved. I would continue in my next video to the remaining transactions of this particular example.